This high conviction stock is up over 1,200% in the past year, and they don't sell iPhones, they don't sell products online, they sell electric vehicles and batteries. This stock has huge potential over the coming years, and I could potentially see this stock running up hundreds of percent within the next 6 to 18 months. In this video, we're talking all things NIO Incorporation, which trades under ticker symbol NIO. I'll be recapping the business model of NIO in 45 seconds. I'll do a fundamental and technical analysis. I'll explain why NIO could be a destructive company in the Chinese and global EV markets. I'll do a recap on what makes NIO different from its competitors like Tesla and XPeng, and I'll be explaining how I plan to trade this stock. Let's do it. Just real quick before I get into this video, I want to congratulate everyone that held through the volatility of Skillz stock after I released my last video on Skillz 3 weeks ago. This stock was continuously beat down due to market conditions, but I continue to see this stock to be at least $30 soon, and we're already starting to see signs of that. So back to the video. NIO is a Chinese electric vehicle and battery technology company. They currently sell in China, Hong Kong, the United States, the United Kingdom, and Germany. The company offers 5, 6, and 7-seater electric SUVs as well as smart electric sedans. The company also offers power solutions, some of which include Power Home, which is a home charging solution, and Power Swap, which is a battery swapping service. They also provide maintenance and repair services through its NIO service centers, and finally, they provide third-party liability insurance and vehicle damage insurance. So it's safe to say that NIO is not just a car company. Many people view these new EV companies as car companies, but they're just straight up wrong. NIO is focusing on vertical integration, which will allow them to make more revenue and more profit. And in many instances, EV companies can be viewed as tech companies rather than automobile companies. This is exactly why Tesla and NIO are trading at much higher valuations than automobile companies. Ford, which has a market cap of $47 billion, is viewed as an automotive company. But NIO has a market cap of $67 billion because it's viewed as a tech company. NIO recently had a large correction as the entire growth sector as a whole slowed down, and this could provide an amazing buying opportunity for investors. NIO is based in Shanghai, China, and their goal is to shape a joyful lifestyle by offering premium smart electric vehicles and being the best user enterprise. So for a quick timeline, NIO was founded in 2014 by William Li, also known as Bin Li. After their launch, several companies invested in them like Sequoia, Lenovo, and more. In 2016, they'd been given their autonomous vehicle testing permit by California, which allowed them to start testing on the roads. Then they launched the ES8, which was their first volume manufactured electric vehicle in 2017, and they began making deliveries in June of 2018. Also in 2018, NIO opened its first battery swap station in Shanghai, China, and the company went public. In 2020, NIO announced $1 billion in new funding from a group of Chinese investors, and NIO launched their battery as a service system. So if we take a look at the balance sheets of NIO, we start to see some very good signs for this company. In 2018, this company had a revenue of $720 million, and they were not yet profitable, losing $37 million that year. Then in 2019, NIO had a revenue of $1.1 billion and a loss of $172 million. This represents a revenue growth of 50% and a loss growth of about 400%. Obviously, we don't want to see the losses grow, but since this company was in its early stages, we were more concerned about the revenue growth rather than how much this company was losing money. The reasoning behind this is because if a company can make enough revenue, there will eventually be some way to make money off of that revenue. So in many instances, we care more about revenue growth for companies rather than profitability growth, especially if the company is in its early stages. So then in 2020, NIO had a revenue of $2.5 billion and a loss of $287 million, and both of these figures were good. NIO's revenue grew by 127%, which is absolutely phenomenal triple-digit growth, and that's exactly what we like to see in companies that we have a high conviction in. At the same time, their losses slowed down to only a 66% increase in losses. This company doubled its revenue and cut its losses in half, which is spectacular. The Q1 earnings report is not yet out for NIO, but I'm pretty excited to see the numbers that they put out. I'm hoping for another high revenue growth in NIO and a shrinkage of losses. I think this week is going to be pivotal for NIO with their earnings coming out on Thursday, April 29th. They also released their Q1 delivery numbers recently, which was pretty good news. They delivered about 20,000 cars in Q1 of 2021. They also showed tremendous growth in delivery numbers in the year of 2020. In 2019, they delivered a total of 20,000 vehicles, and in 2020, they delivered a total of 43,000 vehicles. This is a 115% growth in vehicles delivered. In their 2021 quarter one, they sold just as many cars as they did in 2019 alone. This company is a growth beast, and I hope and expect to see NIO continue this for several years. I'm expecting NIO to become profitable in the near future by the end of 2022 at the latest, because right now NIO is borderline break even. Next, if we look at the management team of NIO, we see extremely promising things. The founder, chairman, and CEO, Bin Li, co-founded a leading automobile service provider in China called Bitauto. Bitauto was a successful company, and it was formerly publicly traded on the New York Stock Exchange. Then in 2002, Mr. Li co-founded Beijing Creative and Interactive Digital Technology Corporation and has served as its CEO and chairman since. He also served as the vice chairman of the China Automobile Dealers Association, where he was recognized as one of the top 10 most influential and distinguished people in China's automobile dealer industry. Li has so much experience under his belt that he has even been referred to as the Elon Musk of China. It's pretty clear that Bin Li has tons of experience in the automobile industry, as he has served under several leadership positions in various automobile companies. Mr. Li is the perfect leader to make NIO as destructive of a company as possible. Wei Feng, the CFO of NIO, is also an extremely experienced individual. Feng has almost 15 years of experience in the automobile industry. Before joining NIO, he was the managing director and head of auto research team at the China International Capital Corporation, where he was recognized as being the best auto and auto parts analyst and the #1 stock picker in the category of automobiles in Asia. Mr. Feng also served as an equity analyst at Everbright Securities from 2010 to 2013, and he also has more than 5 years of working experience with the ZF Group, which is a German car maker. The last person we'll talk about on the management team in the interest of time is Xin Zhao, who's the executive vice president and chairman of the product committee at NIO. He's previously served as the executive director of Coras Automotive Corporation from 2009 to 2015. Before that, he was the engagement manager of McKinsey Incorporation and the executive director of Lear Corporation. If all that wasn't enough, he was the senior manager of GM China. Clearly, all three of these individuals understand what they're doing in the automobile industry, and they've had tons of prior experience in their fields. You probably couldn't find a more well-versed and experienced management team anywhere else. Next, what makes NIO different from its competitors? NIO's key difference and advantages are related to their battery swapping service technology, which ties in with their battery as a system service. Essentially, NIO has a battery subscription model where customers pay a monthly fee for battery rental and swapping. This is a key add-on to the revenue sheet because not only does NIO make money from each time a customer buys the car, but they also make a consistent stream of monthly income from each customer. This also in turn attracts more customers to prefer NIO because the cars themselves have a cheaper upfront cost because they do not have to factor in the price of the battery. The battery as a service technology makes the NIO EC6 significantly cheaper than the Model Y, which is likely to boost sales and also position NIO really well for the future robotaxi network. So instead of paying nearly $10,000 for the battery up front, customers pay around $145 a month to have a swappable battery, which is cheaper up front, and it helps reduce the problem that charging an electric battery all the way up can take a good amount of time. The battery swapping technology is something that puts NIO far ahead of its competitors like Tesla. Cathie Wood also believes that NIO will probably be the leading company in the Chinese EV market, which is the largest market in the world, because the Chinese government wants a local winner. Just think about the statistics real quick. Do you think the Chinese government will want an American company like Tesla to win? Or do you think they will want a local Chinese company like NIO to win? Obviously, XPeng is also a Chinese company, but it seems like NIO is a larger and more believed in company as it's valued at almost 3 times higher.
You've got Tesla in China, so that's good. You've got an ecosystem building around China. We know that NIO, we don't own it, but we think that government decree, they want a local champion. We don't know if it's going to be NIO or XPeng, which is patterning itself after Tesla, or if it will be Tesla itself. I doubt that because China wants a local winner.
Another important thing to mention is NIO's battery itself is better than Tesla's. NIO's battery is stronger, more powerful, and provides a longer mileage than Tesla. So finally, before I get to how I plan to trade this stock, let's do a quick technical analysis of NIO. If we look at the 3-year chart, we see that NIO ran up a bunch when the market was really euphoric and then corrected down to the blue 50-day EMA. It found a good support at this EMA over the past several weeks, which is a great sign. Also, in the 180-day chart, NIO just broke above the orange 180-day SMA and all the other EMAs, which shows that it's on the bullish upward trend now, which is a really great sign. Ever since February 18th, when NIO broke below this 180-day SMA, it was on a bearish trajectory, and we just saw it break above the 180-day SMA, which indicates bullishness. One little negative that I see in the current chart of NIO is it's currently overbought with an RSI level of 72. This indicates to me that NIO might correct a little this week and test the 180-day SMA as a support again before continuing its bullish trajectory upwards. Some areas where we could see some potential resistance is around the $42.24 mark and the $46.48 mark, which are both previous resistant levels. I think these resistance levels will easily get broken through eventually though, because a company's fundamental value always wins over chart patterns in the long term. So this takes me to how I plan to trade this stock. Well, first of all, I don't plan on trading this stock. I plan on investing in this stock. NIO is one of those plays for me where I just plan on parking my money in it and leaving it for several years. I don't have any current shares of NIO, but I plan to start building out my position now. Anything below $40 is a good deal for NIO in my opinion. If NIO drops below $40, I'm buying. NIO has such high conviction for me that I plan on building out my position to about 25% of my portfolio. Some people say that one stock should never take up more than 5% of your portfolio, but I completely disagree with that unless you're already super wealthy. If you don't already have a high amount of wealth, you should be loading into your highest conviction stocks because that's how you build wealth. Let me put it into context. If your portfolio is only worth $5,000 and you only put 5% of your money into NIO and it ends up doubling, it's not going to benefit you that much because you only had $250 in NIO. In my opinion, diversification matters more as your portfolio gets bigger. I personally believe that small accounts should focus on their 5 highest conviction stocks and that's it. Anyways, my price target for NIO is about $100 within the next couple years, and I think that's completely possible for NIO. Comment below what stock you want me to analyze next. Subscribe for more stock news and stock analysis. Peace.